In the meantime, we continue to take a look at a lot of particular stock movers. We bring in senior markets correspondent Diane King Hall with us here, taking a look first at Pinduoduo, which had an earnings miss.
Yeah,
it's been the laggard of the group overall.
It has. Yeah, it has.
Those Chinese stocks.
Right, exactly. When we're comparing it to JD.com and comparing it to Alibaba, it has been the laggard year to date, and they missed on both the top and bottom line. So it's really difficult to find some optimism within the report. So you're seeing the stock take a leg down today, down more than 8% off the back of its latest numbers. When we convert it to dollars, adjusted EPS came in at $2.65 a share. The expectation was $2.82. Revenue, $14.16 billion. The expectation was $14.47 billion. Now, despite them trailing, all of these companies had some challenges in their most recent quarter, especially when you kind of think of the landscape for the Chinese consumer. There had been some expectation that we'd see some improved performance, but the Chinese consumer has been having challenges both with the property sector. We've talked about that before. That's been taking a toll on consumers there. And then there's been this high unemployment among the Chinese youth. So that's taken a toll. And the thing is, Pinduoduo, which is the parent company of Temu, has had to kind of offer more discounts. It's already a cheap platform when you think about the price point, but it's had to, come in, with all the competition with the others that it competes against, say Alibaba, et cetera, with more discounting. And again, that cuts into your profit margins when you're doing all that discount when it's already a cheap platform. Now, it had gained some ground earlier this year compared to Alibaba, for instance, but that it just hasn't been enough to move the needle, especially when it's had to reduce prices more. And it's tried to expand its international growth. We see a lot of people buying from Temu here in the U.S., but it's not really enough to move the needle because they have such low costs. It's not enough to hit the numbers that they needed to. They said our top line growth further moderated quarter over quarter. This is their one of their top brass saying amid intensified competition and ongoing external challenges. So the fact that they actually flagged the challenges, they tried to put a positive spin on it, but it's still a challenging landscape. Now, the next quarter will include obviously the numbers from Singles Day, so that could look a little better.
Yeah, I mean the intense competition is real because at first they were the one like real discount, but all these others are jumping in. Even Amazon is now looking to be more in a discount-friendly sort of bulk market where you could do that. Let's move on and talk about Deere. This one, there is concern about the pricing power for Deere going forward. Some of the thoughts, the soft guidance is what people are focusing on, right?
Exactly, because they did beat expectations on both the top and bottom line, but, investors are looking at that as a rear-view mirror things, and they called out concerns about 2025. So let's go through the numbers. Adjusted EPS came in at $4.55 a share. That was better than expected. The expectation was $3.90 a share. Revenue $11.14 billion. The expectation $9.15 billion. But again, here's where the concern is going forward. The guidance is they're expecting sales to fall between 10 to 15% across machinery in 2025. Profits expected to come in a range of between 5 to 5.5 billion. The street was looking for $5.93 billion, so essentially closer to $6 billion. Now, it's managing to shake that off. Pre-market, it looked like it would be under a little bit of pressure, but the stock right now higher. They did talk about, you talked about triple whammy. This would be the opposite of a triple whammy, a triple threat, if you will. Decline in farm incomes, high interest rate environment. Now, again, the interest rate environment is changing, and uncertain economy are some of the things that have been pointed to as to it weighing on the company going forward. And they talked about how they're having to reassess going forward the amount of machinery that farms will be replacing. The CEO said, quote, amid significant market challenges this year, we proactively adjusted our business operations to better align with the current environment.
All right. I'm also keeping an eye on NVIDIA, folks, because it's right around that unchanged line. We'll continue to watch that for you, of course, to see how that is doing. And we continue to talk about a lot of the movers. Google in focus, Alphabet's parent, and this is all about Chrome, right? And even though it's been a great winter, I mean, it's up over 25% year to date.
That's right.
But we have some big news here again.
Yeah, I mean, it's been facing challenges this year when you think about all the legal action that's been around it. So that's held it back a little bit when you compare it to others in the Mag 7. But it's, again, as you point out, year to date is still a winner. In terms of the reaction now, it was looking choppy in the pre-market, but you are seeing the stock under a little bit of pressure. The latest, the Department of Justice formally proposing this partial breakup of Google, and they've said that they want the company to sell the Chrome browser. They have alleged that it is anti-competitive. They wanted to sell it as part of this, kind of remedy to what it sees as monopoly in the search market. That's been one of the things that the government has accused Alphabet Google of. This wasn't just the Justice Department. A group of states have been involved in this. If these penalties proceed, this would be the biggest of its kind in quite some time. So that is one of the things. They focus on the tactics of how it's become the default search engine on whether we're talking about iPhones, Android devices. They say that's anti-competitive. It shuts out smaller competitors. They want them to spin off Chrome. They say that the competition can only come back into the picture if they spin this off. But look, Alphabet Google says they're going to fight this ruling, and we know if it will proceed obviously into next year. The new administration coming in is expected to, be more looser on antitrust scrutiny.
Yeah. And, sometimes you hear from the EU and that antitrust, that's different. We're not going to have that here at home. I mean, Trump is not going to fix that over there. But for these companies, and to your point about, less regulation for these Mag 7 type names and concerns about how much the DOJ has oversight on these and too much maybe in some people's opinion. We had a guest on last week who said, look, I really like Google of the Mag 7. It's the one that's been left behind.
It has.
And felt that with this administration that is a little more business friendly, that it would be a good thing for this
It's true. It's true. And, as long as because a lot of times these legal actions take time. And so this company has the benefit of time in terms of pushing appeals forward. So they may stand to benefit under a new administration. Now, of course, as you mentioned, that wouldn't take away the challenges it has in Europe. But to be fair, when you compare it to other search engines, I mean, it's hard to beat it. Maybe there are some levers they can pull back on, but, it's been the leader, not just because it's been the leader for a while for a reason.
All right, let's take a look at another name, and that is Boeing. I love to talk about a great American company, but has been obviously struggling, down over 30% in 1 year. But some really big talk from the CEO.
Yeah, no, it's had a troubling year. The CEO saying that we need to get it together. This is according to multiple reports. The CEO saying, quote, we spend more time arguing amongst ourselves than thinking about how we're going to beat Airbus. Boeing has had an incredibly difficult year. From January of this year till now. January, it showed that the company had some flaws with regard to manufacturing challenges. There was that panel that blew off a plane mid-flight. That is a huge issue. So obviously they had to deal with that and deal with, quality concerns. Now they've just come off the back of this essentially 2-month strike and challenges with employees and recover from that. But it is the only game going in the U.S. when it comes to manufacturing jets. So essentially the CEO said that they're burning through billions of dollars. They cannot go to investors for another bailout. They all recently sold, they put to market $24 billion worth of shares to, kind of beef up their cash reserves. The well is essentially dry, is what the CEO is saying, that we need to do better as a company and trying to kind of get more all hands on deck and get the company to work better. He said that the company won't turn cash flow positive until it ramps up 737 production. It had initially had a target of reaching that before. Now it hasn't reached that now. So they don't have the money to kick off a new plane program, but the CEO says they don't need to do that at this point. The stock is being discounted, currently down another 1%.
Yeah, and the CEO spoke with President-elect Donald Trump and expects tariffs to hurt the company.
Yeah.
They're pushing off research and development plans and
That's right.
focusing also on the employee incentive plans.
Yeah.
I mean, basically saying we are at a low and I'm tired of it.
Yes.
You know, I would not want to be the CEO of Boeing. It sounds like a real uphill battle, just even within the unit.
Yeah.
I mean, you got to focus on taking on Airbus, to your point that you were reading that quote earlier. Final quick thought?
Yeah, I mean, look, the company talked about having the highs and lows that they've dealt with, because they have. If you go all the way back 5 years, if you go back to 2019, they were already having a difficult time before the pandemic hit. They had those, 2 jets that crashed, and then the pandemic hit, and they just really haven't been able to recover. I do like the tenor that the CEO is taking to try to get all hands on deck, whether we're talking about the top brass to the rank and file employees, because they do. And as an investor, you haven't been rewarded if you've been in this stock. If we go back to 2019, the stock is down 61%. Now, it has managed to, level off, some of the bleeding this year. But again, as you mentioned, down more than 40% year to date.
All right, Diane King Hall, great to see you. Thank you for looking at those important names.